And let's talk about the Nagarro deal. What's Persistent, of course, is going to achieve is a stronger European presence, auto, retail, manufacturing exposure. But let's ask Manas Human, the co-founder and CEO at Nagarro, as to what really was this deal all about and why now. Manas, great to have you on ET Now. Thank you so much for your time. Can you hear me clearly?
Yes, I can. Thanks for having me, Aisha.
Okay, brilliant. All of us here are mesmerized, Manas, by the valuation that the deal has been struck at. But as a co-founder, I want to ask you, because I believe Nagarro's stock had fallen nearly 55% from its high to around 33.75 euros, if I'm not mistaken, before this deal. Persistent is paying all cash, and that equates to about 81 euros a share, and that's a significant premium right now that we're talking about. From your vantage point as a founder and a CEO, was this the right moment to sell?
So, the German share market is not very deep when it comes to IT services stocks. And we also have a relatively low free float. So small moves by a few investors would move the stock. So we have been at 212, we have been at in the 30s. So we have had a huge variation in the last couple of years. So I think that the fears in this about this whole IT services sector are overblown. And I think this is, ultimately it's a strategic move. I think it's a very powerful move to build this real AI first company. I think the stock market will see it eventually, but we have amazing logos and they have a great growth mechanisms and formulas for large deals, which we don't have, and we can just combine that. I think it's whether it's across geographies, whether it's across industries, whether it's across service lines or partnerships, we see such amazing commonalities. I mean, not commonalities, but the complementarities that are. I mean, it just seems like a match made in heaven. So, from my perspective as a founder, I think the share market goes up and down, and that's what it does. But we are building value, and we've been building it for 30 years, and we have grown from a small company and gone 10x in the last 10 years, and we continue to do that. And now, hopefully, more powerfully with Persistent together as Persistent Nagarro.
Manas, hi, morning, Sajid here. The Persistent stock is down nearly 7% because of the kind of leverage it's going to take on his balance sheet. And the street is a little worried about the kind of growth that Nagarro has been clocking. Last year, it was around 2.8% on organic, on a CC basis, around 6.5–7% that growth came in for revenues. Give me a sense of your business, because 60% of your business is time and material kind of contract. And that is subject to a lot of AI deflationary pressure. How is that business doing for you? And give me a sense of the kind of outlook you have for 26.
So let me tell you a little bit about this. So Nagarro has been a very differently structured company, a little bit cultish, really about engineering. So what we have really not had is a commercial mindset, to be honest, right? So what we expect is with someone like Persistent is the same sort of acceleration which Sandeep was able to bring into Persistent, because we never had, you won't believe it, but we don't set targets for business units, growth, margins. It's a very different kind of company. And over the years, it's obviously been changing and getting a little bit more, more traditional. But the whole, what we've been able to achieve with this is lean, small teams working on really critical digital projects. Some of the brands we talk about on the website, but there are many, many more brands that we can't talk about. But we have clients that, literally marquee clients. We have 1,000 clients, and many of them are really marquee clients. And there's enormous room to grow. And the churn at the top 200 clients is barely like a couple of clients a year. So we have like long-term relationships working in critical parts, but typically not in the large deal side. So basically in the part that actually moves the needle on the revenue for our clients, right? So more digital transformation. And I think there's so many opportunities. The one is just to bring the large deals. I mean, you saw the Persistent deal that they declared, right? I mean, they have that huge large deal sort of appetite, right? To bring that into our long list of clients. There's also this possibility to, really just, just cross-sell all the services that we have, like they don't have SAP and so on. So I think, and by the way, you just mentioned also this part about AI will make this T&M work less profitable. I believe the exact opposite. I believe the run side is much more at risk because the run side, it's basically you run what you build. So whatever you've built in the last 5, 10 years is what you run, and that doesn't change from year to year. But digital and build can change like it did in 2022 dramatically from one year to the next. So I think the AI transformation is actually digital plus plus in its nature. It's small teams. It's very engineering. So I actually think that that is the more defensible side of the business, especially as COTS products start to get challenged and people start to think of building their own products. I think even right now the systems integration spend is about 30% and the digital engineering is only 10%. So even a small move from COTS products and systems integration into digital engineering, it would be a huge tailwind. So I actually think the whole intelligence transformation that's ahead of us is actually just fit for companies like Persistent and Nagarro. So I'm actually very excited. I think we are trying to build a leading company in this space, and I think we will be able to do it.
Manas, point taken, but can you give us a sense of the kind of AI-centric revenue that you have so far for at least calendar 2025? What percentage of revenues came from AI-centric deals as a whole? And the margin profile is slightly weaker than what a Persistent has. So the street is also worried about the combined margin be dilutive for Persistent.
So, AI today is at a very nascent stage. So, obviously, a lot of projects are using AI. Maybe half are using AI in some way or form. But AI-centric deals, basically it's still a lot of engineering around data, a lot of engineering. I mean, the whole, enterprise landscape, architecture, governance, security, data. These are all complex, large deals, and I think no large company has really gotten to the point where they're spending this sort of transformation yet. They're doing pilots, they're doing different pieces, and of course these pilots, like if you have a forecasting engine as part of a SNOP process, there's obviously AI in many places in that. But I just feel that we are this metric that you're talking about. I find it very suspect. If you excuse me, but I think that really we are going to see AI everywhere. AI is like electricity. It's going to be everywhere.
But Manas, I think, what Sajith was really trying to draw was whether Persistence acquisition solve a structural risk for you, or does it just give you a larger home?
No, no, no. So I think, we have basically feel that, for our growth story, access to this sort of good capital markets is very important. And we've been trying to do that for the last couple of years. We have been in this journey and trying to figure out how to uh, g- uh, get out of the market that we are in. The fact is that in 2020, when we were spinning out of Algair, we wanted to go to the US market, but basically because of COVID, it was much easier to list in Germany, but it's not the natural home for an IT services company, as you'll recognize, right? So we've been trying to solve for that, and now we're also trying to just take advantage of this fact that this is a really pivotal moment and gear up for the next AI transformation led engineering growth that we see ahead of us. We've done this actually, by the way. You can go back to the videos on YouTube, etc. 10, 20 years ago. We were talking about this digital sort of work, which is not pyramids but small teams and all the different distinctions that we are trying to drive. I think we're trying to do the exact same thing now for this intelligence transformation wave that's ahead of us. I believe in the next 10 years, every hotel chain, every restaurant chain, every airline, every healthcare, everybody has to rethink their tech for AI, and it has to be done not just thrown in there with little pieces, but actually done with strategy, with security, with governance and landscape architecture, and run costs. AI is not free, right? So optimizing run costs, structural change. So I think the amount of work ahead of us on the build is enormous. And with the tools that we have, I think that the appetite for, if you look at your life in any day, you go to the hospital, you go to the restaurant, it's all full of these little frictions. You go to the airport, I believe all these frictions will go away with AI, and that's the play. The AI will. So the build that we will build is a lot more. That's what I'm saying, I guess.
Yeah, point taken, Manas. Manas, at the end of it, it'll be about how synergies play out between Persistent and you, and therefore, I believe that what we're trying to gauge is whether your margins can improve, and if so, materially, and what kind of timelines can one kind of build out with regard to that margin number. Because obviously Persistent will bring scale to you, you will bring your competence to Persistent, and therefore how should one look at margin shape up essentially?
No, that's a great question. See, I just point to one fact, and this is a fact that you can is very verifiable. We have not had a CFO. We just added a CFO a couple of months ago. So we are a company that has run even as a listed company without a CFO. We are not a company that was trying to optimize on margin. We were trying to optimize on just having a lot of great clients and doing a lot of great work with them. So that's the company, right? That's where we're coming from. And in Persistent, we see that same story a few years ahead. They started a few years ahead of us, and even in this, they were a few years ahead of us. They went from being a great, engineering company and brought this whole sales power with Sandeep and his team and so on to play, and the commercial thinking, a little bit of commercial thinking, and that's kind of what we're trying to build. So I don't want to, steal Sandeep's thunder. Or Anand's thunder. I think that they will have to, we'll have to sit together and make those plans. But I think that there is a lot of room for margin expansion.
That should be a bit comforting. The other piece, Manas, is with regard to what and how quickly can the capabilities that you have be scaled up by Persistent. I'm sure that this was part of conversations when the deal was happening, or you would have a fairly decent kind of indicative timeline as to how quickly can some of those services be scaled. Can Europe be scaled? Because that's a big presence for Persistent now, given this acquisition. How should one look at some of those levers?
Yeah, so the deal is not done. It has to go through the whole process and the approvals and all that, right? So, but when that happens, you can be sure that on day one, we will be going to our clients and bringing the combined power of the two companies to bear, right? So we're really itching to do that. I mean, there are places, for example, they're doing, some modernization projects with banks, and we have some bank customers where we don't do that kind of stuff. So just the cross sell across different industries is incredible, right? So again, I know it's early days, but the motivation is very high because, as I said before, the complementarities are almost better than you could have designed, by even if you set out to design it yourself. It's just somehow surprising, but we just pick up two very different companies that hardly run into each other, but we have capabilities that we can really push into each other's funnels.
While this deal has an approval of your management and the board, and is good for the shareholders of Nagarro because the kind of premium you get basis the current price that you have, how will you justify this deal to the shareholders of Persistent?
See, the value of a company doesn't change from the stock price. The company is the same company, and the stock price is a reflection of a large market, making its own expectations, etc. The company is the same company that it was when it was at 212. It has actually grown and continues to grow. So I think really that even if you sort of are positing a relatively slower growth in the overall market of tech, although I think that in the build side, it will pick up again and be dramatic. I think that the share price of Nagarro in the thinly traded with very low volumes and all the core shareholders holding on. I think that this doesn't reflect the true value of the company. And I think Sandeep and Anand are very canny people. I mean, they have very sophisticated finance people on their boards and in their teams, and Vineet and so on. So I think they have reached a very good balanced negotiation, and so I think it's a good. I think it's a great deal. Time will tell, but I think it's a great deal for Persistent shareholders.
Last question. You have a very distinct culture at Nagarro, flat, entrepreneurial, Europe-led, whereas Persistent is a very, very different beast, right? I mean, US-anchored, India-driven, now carrying this $1.6 billion in bridge loan to try and fund, close this deal. What's your honest assessment of whether or not there could be any integration risk? And where do you think it could really spring out from? For instance, 4 out of the top 5 European OEMs are your clients. I mean, someone would wonder, how can this client base be leveraged across both entities?
So, I think the first thing I'll just say that culture was among the first few sentences that Anand and I spoke with each other. Culture is very, very important. And you will recognize that for 99% of the people in Persistent and 99% of the people in Nagarro, we are engineers. And what we really care about is engineering culture. We are both engineering led firms. I mean, I would challenge you to name two more engineering led firms. There may be one or two others in other parts of the world, but in the Indian base, for example, I mean, two really engineering-led firms, and also in Romania, in the Middle East, in everywhere that we are found, we're really engineering-led. So I think that is a very strong commonality. I think engineers like to work with engineers who work like engineers, right, and not like in a more traditional services base. So I think that is the great power of the cultural fit. And yes, from an org design view, there are differences. But we at Nagarro have done about 30 acquisitions and integrations. We are totally expert at that. We have acquired companies in the Philippines, in Japan, in you can just name it, right? We've done that. And so we know how to integrate. We are probably the experts at integration. So what Anand and I discussed in the very first meeting, and Sandeep then joined us, is that that is going to be a key part of what we do. And you can be quite sure that Anand being a founder knows the importance of people. I being a founder and my founders like Vikram, Vikas, Manmohan, etc., all know the importance of people, and we will really know how to design this so that everybody feels really good. So yeah, it's obviously at a scale that is slightly larger, but we're also not in a hurry. What we want to do first is to bring our combined power to our clients. That's number one. That's priority number one.
Okay, Manas, wonderful having you here. Thank you so much for coming in, speaking to us very candidly. Really appreciate.
Thank you. And we are meeting Sandeep and Anand now at our AGM. We have it today, and so really looking forward to that. Thanks very much.
Thank you, Manas. Thank you.